JB here. Hope everyone's doing outstanding. Monday, October 20th, 325 on this fine afternoon talk. Really quick about mark some names I'm looking at, go from there. Let's see if I think the audio is working. Hopefully it is. Anyway, talk really quick the markets. S&P is up 1% here. Somewhat I wouldn't call it a lackluster session, but since 10:45 or so, been chopping around in a 0.3% range. Headlines would say market is trading higher in optimism that the government shutdown is going to end this week. I forget whatever headline. So funny because the markets didn't sell off because of the government shutdown, but the arguments for other days. Uh, Also, you had Treasury Secretary Bessent saying there's going to be some conversation between the U.S. and China, their counterpart around the tariff situation. You also had POTUS comments this morning at the meeting he's having with the Australian Prime Minister. So I mean, it's not much this week. We have earnings season. Obviously, you have Netflix tomorrow, Tesla, IBM, Intel. Um, but the big data piece will be Friday, the CPI data, which has been held off because of the government shutdown. That certainly is going to possibly create some volatility. But I think it's pretty much it's baked in now. So the market's pricing in a 0.25% rate cut at the Fed meeting next week, and then one more cut before the year is out. So I don't know. I mean, if the CPI is skyrockets, if it's like 4% or some crazy upside, I think it'd be almost a scenario where maybe there'd be a jumbo rate cut. So it's like that would be almost like dovish, right? And then I don't. So we'll have to see how this all plays out. No, wait, maybe I have it backwards. But anyway, so that's the big data points this on Friday, and then hopefully the government shutdown gets resolved, and then we can go back to somewhat a little bit of normalcy here. But good sign. I was talking about this morning. Want to see tight trading ranges come back, or at least ranges not as wide as we had seen since that Trump tweet around China tariffs, and I think good sign here. And then kind of again rationalizing the move today, just to make it sound like the market cared about the government shutdown. They have to put that in there. But I was saying the longer the government shutdown goes, the impacts increase, or at least the likelihood of some impact. And then you have worry or concern that the market might not be able to, the Fed might not be able to react properly if they don't have the economic data. All right. So that's overall markets. Just quick on some individual names here. And did I have the range on the SPY? So 674. And then, I talked about the support resistance 658 and 653. Doesn't look like we'll get there, but you never know, right? All right. So quick on overall market. Now, individual names. First SanDisk, right? So gapped at the open. Plan was to take some off at the open. Lotto trades. Those calls. Typically, I don't get contracts that are over $1 and call them a lotto. But considering the volatility, the wide swings in SanDisk, I thought it offered a decent risk reward. Sure enough, it gaps higher at the open. I was able to take some off for 100%. It gets over the 150 handle. It's trading around 152 or so. And then it started to dip a little bit. I looked at the premiums. They were still holding up. I just didn't want to be the spot where the premiums eroded quickly. So I locked some more in for 100%. And then I just held the rest. So, and they're sitting here. I think they were $2 just a little while ago. One idea or one thing I was kind of thinking over, I'm like, do I lock the rest of the 165s in? Yeah, there's still $1.90 by 230, so they're still fine. Do I lock some of those in and then go out to the following week? But the 180s are 255 by $3. And then the following week, which is November 7th strikes, they report earnings. And the implied move on the options, $32. Those 180s are 650 by 750. So not by any means the type of risk reward trade that I take on. So I'll just pass on definitely not getting anything November 7th, but I'll just hold the rest of the October 24th here. And then depending on what it does, the two options, one is lock the rest of the 165s in and roll out to the October 31st strikes. If the premium starts coming down on those I think they're the 175s and 180s, right? That's one option. The other option is to get some higher strikes for this week if there is some kind of crazy FOMO. So I kind of talked about it last week too. SanDisk is kind of on that pardon my French, my oh shit basket, right? The names that might get destroyed if when we have this capex, all these names have been inflated from this capex circle jerk. At some point, that air is going to come out. When it does, some of these names that have been up massive are going to have some big pullbacks. At the same time, the more I start looking at SanDisk, I'm like, this might be like an under the radar name that hasn't appreciated as much as it should based on what's gone on with Micron. And some of these other names in the storage space, the Seagates, the Western Digital. So to me, I'm like, maybe it has more FOMO. Maybe it goes up to $200. So not gonna sit there and say it can't go back down to 125 or 100. But at the same token, I think there's a likelihood that it has some more follow through here, especially the fact that it's kind of been holding its ground even on some of the weak sessions. So that's kind of thought process there. All right, so that's SanDisk. Sorry, there's been chart issues. AWS has been screwing everything today. I put it on FinTwit, right? It's funny. Everybody talks about trying to have leverage these countries on other, especially with the U.S. with the tariffs and the trade war and sanctions on Iran. All these different means that countries use to force favorable terms, whether it be diplomatic relations or whatever. But it'd be funny if they just figure out a way to shut down some country's internet for 6 hours. I'm sure they that would avert having to use any of these other tools, because it's just crazy how it screws up people's lives these days, because it's so intertwined with what everything goes on in daily life. All right. So anyway, so AWS has been screwy today, so it's tough getting the charts. So I don't have all my full charts here. But anyway, so this morning Reddit's starting to go. I was talking about it on a rant this morning, sitting at 201. I'm like, kind of disappointing. Was already squeezing at the open, but I think when it goes, it's gonna be a substantial move. So it was 204, 205, and it looked like it was going to start to do some follow through. I got the 230s. It continued to rally within about 15 minutes, I guess. So I got the Reddits at 932 or 940.35, and then within 12 minutes I was able to lock some in for close to 100%. It continued to rally. I locked more of the calls out for over 100%, and then I went and got the higher strikes, just as kind of like just in case it was continued follow through, and then gave me the ability to lock some more of the 240s in. I'll continue to hold those 230s in. I'll continue to hold those strikes. It's one that unfortunately it's come off. It was 211.11 it hit. And of course I don't have my 10 session trading range Reddit chart that I've been posting every day. So I don't know exactly where it came up to on the resistance side of the breakout. Let's see if I can pull it here. But down from 211 all the way down here is 203. It's just frustrating, but same time, it's like one of those moves where it kind of like wants to shake everybody out, and then maybe tomorrow we have a continuation and a break of the 211. So I'll just continue to hold the calls for that outcome. Then I also went and got some Roku spec calls. I haven't traded Roku. I'd have to go back a couple months at least since its earnings back in August. I think just on the chart basis alone, it looks ready to get back over $100. And then you throw in the wild card of the Netflix earnings. So to sit there and think you have both things that I think set up for a nice opportunity on a risk reward basis. So they report earnings October 30th, I believe it is. So tough to get the strikes into next week on Roku. Like the 125s are expensive. Let's see if I don't even have it up here. So I went and got this week's strikes, but of course the market's doing what the market likes to do, which is frustrate me. Even though it's up here near the highs of the session, the lotto calls are still kind of flat here. You start looking into next week, and even if you want to do the premium build, some of the calls on the next week haven't went up too much. So we'll see what happens here tomorrow. If I'm able to get some out to cover costs, I might roll out to get some 120s for next week, just to get some premium build. And then we have the Netflix earnings, which to me I almost think there's like optimism into the report. There might be less optimism, right? I mean, room for the possibility that Netflix might have a beat and raise and surprise people. So with that being said, I think there's opportunity on Roku. So I got those strikes. When I get a chance to lock some in to cover costs, I will. Reddit, and then brings me to SSYS, right? So if you don't know SSYS, one of my favorite names. I've traded off and on for over a decade, I guess. But it was one of my top 5 stocks. Maybe it was 2012, 2014, somewhere in there. 3D play. If you don't know the 3D cycle, there's all these sectors that went on booms over the years. 3D has done it maybe 2 times at minimum. SSYS was $105 stock, maybe back in 2013, 2014. I always thought the 3D sector was a great play, right? I mean, the future, if you think about all the things that are going, the robotic side of things, automation, 3D allows people to produce parts and components and things, not in a factory, right? There's a lot more. That's like just an easy way to describe it. But let's say you're a airline let's just say you just make vacuums or whatever, and you need to, all of a sudden you have a recall and there's a part on your vacuum that needs to get replaced, right? You can have 3D printers create that piece based on specs and whatever, and like really take a situation that could be really bad and make it somewhat efficient, right? That's just not the best example. But to me, I always looked at it as like, it's just such a great opportunity. I just think at some point these names go back on fire, right? So SSYS, like a $1 billion company, trades like 1x revenues or maybe 2x revenues. There's always been M&A interest, and it's always a name that's on my radar. So even the last couple of weeks, you start seeing it go. You start seeing DDD and SSYS go. I kind of like sit on my hands because I've traded on and off, sometimes with success, sometimes with not with success. But then you see crazy volume, right? And if you look at a call volume right now in SSYS, it was 30,000 calls traded on, which is insane. I would have to go back to see the last time I had that amount of call volume. Right now, it's 47,000 calls traded versus 700 puts. And earlier there was only 100 puts. So insane call volume. At some point, the market makers, has to be covered, right? I mean, what is it covered? I mean, you can't just sell options. Can't just be sold without the underlying stock. So there's got to be something, some impacts or ramifications in the market. Finally, it looks like it's spiking. I mean, it's up 11% here today. So I was looking at the strikes going through. It was the January 15s. They were like 80 cents. To me, I didn't want to go out to January, number one. I didn't want to pay 80, 90 cents for the contracts. Me, I'd rather go closer, because if the move's going to happen, the better reward for the risk. So I went and got those December strikes. They're up to close to 40% here. I'll continue to hold them. Similar to Roku, the chart set up tight trading range for the last couple of months. So if it breaks over this 1250, I think it's off to the races. So that's SSYS. Running out of breath here. Sorry about that. SanDisk, SSYS. Serve Robotics just sitting here. I mean, it's up in the green all the way up to 15 and bouncing around down to 1445. Tough one to trade there too. I'm trying to think of some of these other names that I was looking at here earlier today. And Reddit, of course, is hitting 202 here. SanDisk. Oh, Oracle, right? So, disappointing. I could have went and got the Oracle puts into this week, but the concern with me was the bounce, right? And even on Friday, I probably would have, if I had strikes heading into this week, I probably would have closed out the puts on Oracle, just because I thought, in my mind, I think at some point it's going to head back up to that 345 level hit after its earnings. Sure enough, another 5% to the downside after closing 6% to the downside on Friday. So hindsight's 2020, but maybe it finds some footing here. I don't know. So yeah, that's Oracle. Oh, Intuitive Surgical, right? I was also looking at ISRG to play for sympathy move into earnings tomorrow. Another one, tough with the implied move, right? So, I mean, it's 8%, $35 implied move right now. And then you start looking, I'm trying to look for decent risk reward strikes. And the 530 strikes, the weeklies are 95 by 105. So maybe you can get those filled for $1. Even with the 3% move today, they're pretty much, I mean, they're up like 20%, I guess, if you got the strikes on Friday. But to me, I want to be able to get them and close them out for 50 to 75 or even 100% to cover costs and ride the rest. I don't know if the 530 strike is going to offer that risk reward, that opportunity, unless the stock really goes on a tear tomorrow. So I'll probably just sit on my hands with that one. Although you look at a setup, it's $100 off its highs. Maybe I'll be kicking myself tomorrow. We'll see. Maybe I'll change my mind before the close. I think that's it, folks. Just have a great day. I'll be back on audio later. Rock and roll.